As we shift gears here, now we want to discuss the outlook for M&A in the second half of 2025 and beyond. Joined here in the studio by Effram Kaplan, Senior Managing Director of BGL. So glad to have you in the studio here. Thanks for joining me. I know it's a busy week in personal lives for everybody, so we appreciate you taking the time. Let's start big picture. M&A, we're starting to see signs of it coming back, big mega deals and stuff. Is that still on the horizon? We still going to see that out into the future?
Yeah, good to see you, Alex. In the backdrop of a couple rough years in 22 and 23, the market was hoping for some green shoots in 24, and quite frankly, we didn't really see them come about. But I would say if you look at the data, if you look at year-to-date volumes for 25 relative to 24, while they are down, you've seen over April and May some positive signs of resurgence in volumes, which we did not see in 24. Valuations continue to stay quite strong. But there is some of the green shoots that we're also seeing is that there's a significant amount of strategic market activity. So absent a dearth, which we saw in 22 and 23, you're really starting to see the strategic market keep those valuations strong. And we're also starting to see some of the run-of-the-mill buyout activity happen. So given that we're an M&A and capital markets firm, we're hoping that that trend continues.
Yeah, and this is where it's interesting, right? Because from an acquisition standpoint, obviously there's really hot sectors, things like AI and the startups, whether it's VC, PE, big hyperscalers like Apple and NVIDIA and all them looking for deals. That stuff's happening, looking for the startups, looking for the next hot thing. But then it's also, even in things like oil, we saw these big mega mergers, and we see it's almost like a joined together out of necessity in some ways, maybe. How are you seeing it sector by sector? Is it still like hyper specific depending on what sector you're talking about, how strong or not strong this M&A world is?
Yeah, there's probably two things to comment on there. One is just the segmentation or the interest in certain aspects or sectors to invest into. Secondly is the structure of the private market relative to the public market. So
right.
let's talk about the former real quick. Yeah, there's the cliche AI opportunities that are super hyper growth, and the public markets are glomming onto those and chasing those. We've been around for 30 years, and a lot of our DNA and a lot of our history really is founded in old school industries, industrial markets, healthcare, infrastructure, and services. And quite frankly, while AI might be the name of the day, we're seeing massive support and massive strength globally to deploy capital into the services market, into the infrastructure market. And a lot of that is driven from, frankly, what is probably the biggest unknown that is keeping from this market from the dam breaking, if you will, from capital, is just this massive amount of uncertainty around policy, as you've spoken with some of your past guests, and tariff issues. So if those things can get ironed out, you'll see broad-based recovery. But right now, services, infrastructure are really bright spots within the firm, and I think the economy as a whole.
One, I think that makes a ton of sense, right? Like, you got to know the game you're playing before you can make major decisions. But one trend, and this is just anecdotal, I've noticed, and I'm sure there's data that you'll have to support it or not. But it's becoming increasingly difficult in several of the industries, particularly industrial ones, to be the small business in this day and age where technology is important to have, whether it's automation, whether it's logistical networks, whatever. I grew up in a family that owned a small trucking company, and it just became increasingly difficult in the last several decades to compete with the very large companies. And it seems like it's not limited to that specific industry. It's a general trend of bigger businesses are swallowing up market share across the board. Now, that's great for the M&A world, but is that out of necessity or because these bigger companies see opportunity to expand that way?
Yeah, I'm glad you brought it up. I would actually say because of the proliferation of product in the private markets, because of the different ways to access liquidity in the private markets, I actually believe it is more efficient. There's a better risk-reward pendulum when it comes to deploying capital into the small businesses such as what your parents had when you were growing up. So the amount of return that you actually can access in the private markets relative to the risks you take, I think is a better a better calculus than really deploying capital into the public market. So I actually think there's the liquidity premium that used to be placed on capital to be in the private markets is coming down, which is pushing more money and more interest into the private markets. Mm-hmm. So I'm frankly excited about the small business. I'm excited about dealing with opportunities or building opportunities in the old school industries, whether it be trucking, transportation, digital infrastructure, environmental, or the like. So I think there's huge opportunity for small business.
And potentially easy synergies for the bigger businesses that are looking to be the buyers, as well as they've already got the investment into this technology to maybe bring some of those older, smaller businesses to the modern day as things are changing so quickly. As you look ahead, obviously policy uncertainty, but a lot of these trends that have been underway maybe had some hiccups in recent years, but seem like they're trying to come back. Seems like some of the bigger tech stuff, they'll wait longer, but in these industries that they're maybe longer lasting, do you see tailwinds on the other side of policy uncertainty, assuming we get some of that certainty, let's say sooner than later? Big, beautiful bills working through Congress. We got these tariff deadlines coming up. Let's say we got a little bit of an idea of what the game looks like. Do you think things can pick up in the second half of the year?
Yeah, we have not, as a firm, we're a very sector-specific firm. Mm-hmm. So we're less product-focused, we're more sector-focused. Right. I'm comfortable saying that we have not seen or had this much confidence in what's to come over the second half of this year than we have over the past few years. When you think about why...
And this is both sides, buyer and potentially acquirer?
Yeah, I really don't think about buyer-seller gaps. I think as a banker, my job is to bridge those. I do think, generally speaking, on a more macro level, the uncertainty that we've experienced from a policy perspective and a tariff perspective are really, in our view, the main headwinds that have been there to really allow this market to break out. We don't expect the dam to break. Do we expect cracks in the dam to slowly unfold or break a little bit more so that more M&A will happen? We believe that. So that's going to happen over the course of the next couple of years, but we think it will be much more systemic than periodic and up and down, super volatile. We think the VIX will come down. So we're excited about the prospects over the next few years compared to where we were the past couple of years.
Okay, so final question then, for those who are focused on public markets and you got a specific front row seat and lens into something a little bit different, would you say to our viewers who may be self-directed investors and trying to decide if they're looking to buy, that this is a positive reflection of the economic outlook?
Absolutely, 100%.
Good stuff. Effram Kaplan, appreciate it so much from BGL, joining me here in studio for a really good conversation and exciting. We'll look to have you back soon, continue that.